Good afternoon. This Wednesday, March 1st, going with video format today. I've got a lot of shoveling to do, snow, and I don't have time to type. The crop insurance spring prices were set $5.91 for corn, $13.76 beans, spring wheat $8.87. Now, something I'm going to tell you about this is last year when these numbers were set, I told you they were going to be low. I said we were going to be climbing in March and April and into May, and we were going to see better pricing. Well, this time around, I can tell you, now is when to work this insurance because it's going to be hard to probably hook $5.91 without some weather scares, with everybody planning on probably going extra corn. Beans will probably hit that tomorrow, $13.76. But spring wheat here too. These numbers are worth signing up for. Give us a call, 701-222-0221. Our 800 number if you need it. It's on our website, heartlandinvest.com. Okay, today we had seen a little ruffling of the feathers again. Russia says it will only renew the grain deal if its interests are taken into account. They're upset about a bunch of things. That did create a morning balance on the wheat, but quickly sold off when weather models later today show on the 15-day model. This is the 15-day. Some moisture making it into western Kansas, possibly Texas Panhandle, Oklahoma. So this is a 15-day model out. Tomorrow, there could be nothing in here. So we'll see. But it kind of took the cooler onto the wheat market, but nonetheless, corn, again, free fell today, but the low seemed to come in at 622 when this popped out. USD has the EPA proposing expanding higher ethanol blends to 15%, E15 gas. They're going to have meetings here in March, early April to make a decision for this summer. And that would be useful and helpful. So that helped put a little short-term low on the corn, which has been an absolute free fall. We talked about how the topping pattern looked very similar to the fall top. And when she let go under this 200-day moving average, it was an implosion in price. And note that today, which we will label wave 3, almost went to what I was anticipating for the spring low, near 615, 620. We're there already. So what this does tell us with such a dramatic decline, that if our wave 4 comes in, wave 5 will likely be even lower than what we thought it was. Take a look at Fibonacci retracements. If we can get a bounce going here, first line in the sand, 847, 846, and that probably will be the problem child because it lines up with these previous lows. Corn initially, when she came down, we thought she was going to hold those values, do our bounce, and then set lower. But we took these out like they weren't even there. So it's amazing how they line up with a 38% retracement. So what I'm telling you is 647, outside chance towards 650, probably be the top side of wave 4. This moving average is going to come tumbling down in here as we probably work out a complex wave 4. It's just not going to be a straight line. I mean, there's going to be some banging around here before she gets there. But then ultimately, I think we're going to have to move this down a little bit. I think once we get our wave 4 in place, we get later down into spring, the onset of corn sales out of Brazil picks up, we're going to have troubles with our corn as our window, February through May is when we sell our corn. We aren't selling much at all. And even Mexico's arguing with how much they want to take with us, especially the white corn. They don't want any of our white corn. They want non-GMO white corn if we got any. On the new crop December corn, at the beginning of February, I remember saying I thought we'd probably head down here during the month of February. Well, it gave you a good average, 591, but the break hard here back down to what we thought would be the 786 retracement near the 560, 565 range it was touched. That makes that federal crop insurance look pretty good because weather scares, yeah, they can occur, but even the major moving average resistance that has capped this baby every time we got up there basically gets you the crop insurance price on the board. So we'll look for that on some short date put options because you know how the insurance works. Anyway, it's the bushels. And if you grow bushels, that insurance is going to kill you because the bushels will kill the insurance. We need to have some hedges on for the board. On soybeans, okay, interesting. Bottomed the day before, first day of the month. Here's first day of the month. Last time it peaked on January 31st. Here too, then December 30th, peaked. So they're nasty for coming in a day earlier. I might have to start moving these blue arrows to the last day of the month, but here's a first day of the month. Here's a first day of the month. Here's a first day of the month, so maybe we'll start sliding them over. Here's a first day of the month. but it came a few days later. So what we're seeing here now today is back above the 95-day moving average, which some use the 100-day. I like the 95-day. It seems to fit better. We better see some rallying tomorrow, and then that implies we are having a short-term low in here, but I don't know if I get too excited about that low because it is a series of new lows. We do have our top in place. This is wave 1, 2. This is wave 3, minor wave. Now we're going to do a 4, and then we'll do a final 5 down in here some way. That will be number 1. First wave down. Then you get your spring rally of some kind or a weather rally, and then we dump again. But the point is resistance now as we climb. Fibonacci retracements. First line in the sand, 1505. We're getting pretty close. Probably see that tomorrow already. But the reality is you can just see this prior support becomes resistance. Lines up with the 50% retracement at 1514, and the purple line here starting to slide lower. You can see the connection start to occur. Physics, something up in this 1510, 15 area sell, and then we do the finish of wave 1 somewhere probably near 1470 or lower to some effect. New crop beans, of course, holding up a lot better than the corn. Many think we're all going to see acreage at best matching last year or just slightly better. So held up a lot better, but resistance obviously on this bracket, some resistance here. 1380, any recovery, you can beat crop insurance, but not by much. They're 1376. So it just so happens to line up with 1378, 1376, probably some willing sellers once it gets there on November beans. Kansas City wheat, okay. Well, Kansas City wheat's the better performing of the pack, made its low yesterday. Notice how it held the January lows, and then it's trying to stabilize. Our turn date hits Friday, the 3rd, which spills into a Monday, so then you got to give it the 6th. But maybe it came in early. We'll see. Chicago wheat did make new lows under the January low, and now it's trying to stabilize. But let's keep in mind recoveries I wouldn't get excited about. That was a 4th wave that was finished. We had 5 waves down from our wave 2. We had a 1, 2, 3, 4, 5 waves. There was your 3. We pushed up into a wave 4. Now we're probably subdividing again. 1, 2, 3, 4, 5. We'll see how this plays out unless this Russian grain deal turns into something and or the rains don't materialize. Then that determines, the kind of strength we're going to get. But we were looking for a March 1st turn date, somewhere in the opening days of March. We'll see what we get for a bounce in here. Something to show you. Minneapolis wheat. This dog can never get anything to hunt. 1, 2, 3, 4, 5, 6, 7 times now. We're attacking this 865, 870 range. She needs to get out of here. We close under 860. It's lights out for wheat. Like I said in yesterday's video, it's just as well this never happened because we never sold any more wheat because of the Ukraine-Russian war, because what we do have is a defined downtrend line. Short crops have long tails from the crop of 2021 that was short. This market continues just to work a biased lower on price. Cattle, we got to chat about this. Drawing highs off the October and the December highs should give us an interesting development. Outside of this day, this one right here, we can never seem to close above this channeling line. Well, we certainly can trade above it, but we can't close above it. We had an outside day last week, and now today had an outside day down. This is getting pretty nerve-wracking for this cattle as it's creating that this could have been a top. It seems like the board got sold because of it. So this morning's strength, when box beef came out sharply lower for select, down the cattle market came. And what's holding it up is this bias on our 60-minute chart. I use 102 exponential moving average here for those that want to lay it in on your charting format. You start getting under this 164.40 range, that could create what we would call an A, B, C decline in here and get nasty if it was to find legs not near 163. Then we got to go to 162, so you can just kind of see the pancaking that can occur here. So this is a problem child. Even June cattle, look at this, could only do that one day above the channel line, and then all it can ever do is pop it. And today, outside day down, I think we got a date at 159 for these June cattle on this kind of action. That something happened here on Monday. And I think that was last Friday, excuse me. And that's going to create some action, I think, that's going to be corrective in nature here. Even feeder cattle, look at this rough day. And that was already happening before the corn even turned up. So if you throw that on a continuation chart, we really don't have support other than if you run fast trend lines. This could break down into the gap area here, 188 and a half to 189 and a half if they really got nasty in here. Maybe it's tied to, and I'm just dreaming here, what if the safe grain corridor ran into a snafu here in the next week to 10 days and they all of a sudden pop the grains? Well, then that's got a possibility of hitting something in here. Just making you aware that that's in trouble. Now, reverse of that is hogs. I do think we're working out that seasonal low. Put in the low. We've had some dynamic trading here, pulling back. They just love to kind of, like a dog going back to its puke, they got to check out that support level before turning. June hogs, I had labeled this out for you yesterday. I showed the 5 waves up to what I believe was wave 1 off that Feb low. And now we had to go all the way to the 786 near par this morning, match up with those prior lows in January, like a dog cleaning up his puke. And so we'll see if we can't get a wave 2 in here and now start some kind of wave 3 as we move into the month of March on these hogs. Gold did recover today, back above this moving average resistance. They spent 4 closing bars underneath it. Yesterday, maybe let's just call it 3. But the dollar did stumble from our projected resistance, 105 plus area. And now we'll see if that does stumble more. That'll have that gold popping a little higher again, probably back up in that 1890 range. Crude oil. We do think we had the last of the low last week. Been a lot of consolidation here. We're trying to work higher. A lot of resistance at $80 until this thing gets through. And take a look at this. When you take a look at the grand scheme of things since last year's high on March 7th, we bottomed in December, but it's been a complex apexing, coiling been going on in here, waiting to break out. And so, we could hit another point here, one more pullback. But once we get past mid-March, seasonals, granted, this is mid-March last year, but this was an explosion of an unsustainable value. But now we could start to see the seasonal normally turns up by mid-March and carries higher into May and or June when she tops and then drops again. Heating oil, I want to talk about this. Last week we said clean up, do the finishing of your purchase for your summer needs and harvest on the fuel pricing. Likely was bottoming last week. I said if I was wrong, you're probably off 10 to 15 cents. We could go to the 78% retracement of the December low, but I said why risk it? Because if you take a look at the long-term diesel fuel chart going back to 2011, 2012, 2013, 2014, we have inflation, right? Well, the lows of those years was equivalent to what we were already at last week, so I said why not buy? So that was our recommendation, and fuel is now turning up. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.